If you want awesome products at great prices, check out the in the description. From trade war tremors to tentative truce, a roller coaster ride for global markets. The global financial landscape has experienced a dramatic shift in recent weeks, swinging wildly between apprehension and cautious optimism. The catalyst? The seemingly unpredictable pronouncements of U.S. President Donald Trump regarding trade relations with China and the leadership of the U.S. Federal Reserve. Weeks of aggressive rhetoric, characterized by escalating tariff threats and pointed criticism of Federal Reserve Chairman Jay Powell, had sent shockwaves through global markets, leaving investors on edge. The uncertainty, fueled by conflicting signals emanating from the White House, created a volatile environment where fortunes could change overnight. Initially, the president's unwavering stance on tariffs, his pointed attacks on China, and his thinly veiled threats towards Powell painted a bleak picture. The escalating trade war with China, characterized by tit-for-tat tariff increases, had already begun to disrupt global supply chains, impacting businesses and consumer confidence alike. The constant barrage of negative pronouncements from the White House further amplified the anxieties of investors, creating a climate of fear and uncertainty that manifested itself in market downturns. The fear was palpable. A full-blown trade war could cripple global economic growth. Gold, traditionally viewed as a safe haven asset during periods of economic turmoil, surged to a new high, reflecting the deep-seated anxieties within the global investor community. The precious metal's meteoric rise, exceeding $3,500, £2,620 an ounce, served as a stark reminder of the gravity of the situation and the considerable risk aversion prevalent in the market. This dramatic price increase highlighted the palpable fear that the escalating trade tensions could spiral out of control, triggering a broader economic downturn. However, a dramatic shift in tone emerged from the White House, seemingly out of the blue. President Trump, in a surprising volte-face, announced a significant softening of his stance on both China and the Federal Reserve. He declared his intention to adopt a more conciliatory approach in trade negotiations with China, signaling a potential de-escalation of the ongoing trade war. He stated that tariffs on Chinese goods could be reduced substantially, offering a glimmer of hope for a resolution to the prolonged trade dispute. While he clarified that tariffs would not be eliminated entirely, the implication of a significant reduction was enough to spark a wave of optimism across global markets. This unexpected pivot was further reinforced by Treasury Secretary Scott Bessent, who echoed the president's more optimistic outlook. In a speech delivered at the Institute of International Finance in Washington, D.C., Bessent expressed confidence that a de-escalation of the trade war was imminent. He subtly implied that China recognized the need for economic adjustments, suggesting a potential for a mutually beneficial resolution. Bessent's remarks, delivered both publicly and in a private meeting with investors, served to bolster the growing sense of optimism regarding a potential trade deal. Adding to the wave of positive sentiment was President Trump's unexpected retraction of his threats toward Federal Reserve Chairman Jay Powell. After days of publicly criticizing Powell's monetary policy decisions, including his refusal to cut interest rates, the president reversed course and explicitly stated that he had no intention of dismissing him. This abrupt change in demeanor effectively neutralized a significant source of market uncertainty. Powell's continued tenure at the helm of the Federal Reserve offered a sense of stability and predictability, reassuring investors that the central bank would maintain its focus on managing the U.S. economy, irrespective of political pressures. The market's response to these developments was immediate and dramatic. Stock markets around the world experienced a significant surge, reflecting the palpable relief among investors. The dramatic shift from fear and uncertainty to cautious optimism was breathtaking. The gold price, which had previously soared as a safe haven asset, experienced a considerable retreat, falling from its recent peak to approximately $3,307 an ounce. This drop vividly illustrated the market's renewed confidence in the outlook for the global economy and the waning fear of a protracted trade war. The situation underscores the volatile nature of global markets and the profound impact that seemingly unpredictable statements from political leaders can have on investor sentiment and economic conditions. The recent events serve as a potent reminder of the interconnectivity of global economies and the significant influence of political developments on market performance. While the path towards a resolution of the US-China trade war remains uncertain, the recent developments offer a tentative beacon of hope, suggesting a potential for de-escalation and renewed economic stability. However, the lingering uncertainty serves as a cautionary tale, highlighting the need for continued vigilance and a realistic assessment of the risks that remain. The coming weeks and months will be crucial in determining whether this tentative truce will evolve into a lasting peace, or whether the market will be forced to endure further bouts of volatility.